Yes, we are going to talk about the most debated topic of 2020, that is the electric vehicles. And I'm pretty sure that is going to be the most debated topic of 2021 and beyond. The EV stocks completely dominated the 2020 stock market, which led to the V-shaped recovery from the March lows. Electric vehicles are the new disruptors who are going to phase out the ICE cars in the coming years, and due to this change, it even forced our traditional car makers to take electric vehicles more seriously. In the past few years, there are so many companies that have come up as an electric vehicle startup, and will they all be like Tesla? We don't know the answer to that. Today's video is going to focus on the different options which is available to retail investors to invest in this new technology. Hello everyone, welcome back to the channel Invest for Tomorrow with Kay, and on this channel we talk about personal finance, investing, stocks and much more. So without further ado, let's dive into today's video. Before we jump into our list, here are the rules of the game. Number 1. For the purpose of this video, we will keep the traditional automakers like GM, Ford, BMW, Daimler, Toyota, etc. out of the scope. The focus will be purely on identifying and understanding the companies that call themselves technology companies making cars. Second, we are going to exclude all the startups that are not public yet, which means that the retail investors cannot invest in that stock at this point in time. Number 3, we are only looking at the passenger vehicles, which excludes companies like Hyliion, Workhorse from today's video. If you would like me to do another video focusing on these companies, let me know in the comments. Tesla needs no introduction, but if you have not heard about them, they are the market leaders, and every other company is either trying to beat them or follow their footsteps. Tesla has become the gold standard of EV space. The richest man in the world, Elon Musk, is the owner of Tesla. At the time of the recording, the market cap of Tesla is $837 billion, and they are the 7th largest company on the planet by market cap. The company was inducted in S&P 500 in December 2020, and since the stock has surged more than 35%. Here are the key points from the most recent quarterly reports of Tesla. Tesla missed on earnings in quarter 4 but beat on revenue. The company said it expects an annual average delivery growth of 50% going forward. Tesla also said it would begin producing its latest model, a crossover SUV, the Model Y, at a new plant in Austin, Texas and Brandenburg, Germany in 2021 using the company's own new battery cells. As an investor, this stock is an absolute must in anyone's portfolio if you would like to diversify and join the EV space. It is always advisable to dollar cost average and continue adding to your position throughout for a long-term investment. Number 2 on our list is NIO, also known as Weilai in Chinese, was founded in 2014 by William Li. NIO has become the 5th largest EV company in the world by market cap, leading behind some of the big names like BMW, Toyota, etc. As you would notice that NIO, like other Chinese companies, operate via VIE, which is also known as Variable Interest Entity. Under this structure, the Chinese company creates 2 entities, one in China that holds the permits and licenses needed to do the business there, and the other an offshore entity, and in the case of NIO, it's in Cayman Islands, in which foreign investors can buy shares. The Chinese entity, which is usually owned by the top executives, pays fees and royalties to the offshore company in a contractual agreement. So just 1 year ago, the stock was trading at $4, and within a span of 1 year, the stock surged more than 1,000% to right now about $60. Analysts have expressed concerns over NIO's debt to equity ratio, which is very high. The current share price reflects over-optimism given no substantial changes to volume profit expectation, quotes one of the analysts from Wall Street. However, there are 2 major factors which you should consider if you plan to invest in NIO. Number 1, NIO is backed by the Chinese government. This is a known fact that China is the largest EV market in the world. And NIO has received a $1 billion bailout from the Chinese government. The Chinese government is providing full support to the local manufacturers like NIO, XPeng and other Chinese brands to compete with the world-renowned brand Tesla, and I do not see that going away anytime soon. Number 2, NIO's car delivery performance is improving every quarter. The company sold 7,007 vehicles in December 2020, which represents an year-over-year growth of 121%. Before you invest in NIO, just keep in mind some of the risks which I talked about and the future growth potential of NIO. The Chinese EV market is huge, and I do believe that there will be more than one player. Number 3 on our list is another Chinese company called BYD. It is the second largest EV company in the world behind Tesla in terms of output and the 4th largest by market cap. The one reason we have BYD on our list is due to the backing by Warren Buffett. Their new EV car called Han has seen sales increase every month to surpass 10,000 units in November. At these levels, the Han models alone is selling just as well or better than vehicles from China's electric car startups like NIO, Li Auto or Xpeng. These are very encouraging signs because what it tells us about the consumer mindset which is shifting from the ICE vehicles to the electric vehicles. And as the demand grows, so will the growth of these companies. From a financial standpoint, the stock has seen a massive surge thanks to the general upbeat nature of EV stocks. The balance sheet, like many other peers, again, is not great. The total liabilities are more than the company's current assets. This is another option for investors to look into for investment into electric vehicles. Number 4 on our list is Xpeng, also known as Xmotors.ai. This company is headquartered in Guangzhou with offices in Mountain View, California in US. They were founded in 2014 by He Xiaopeng. Most recently, they have launched an autonomous highway driving features which rivals Tesla's full self-driving mode. They offer an SUV G3 and a sedan P7. So similar to their Chinese peers, the stock price has also seen a tremendous growth, 163% since November 2020. And from the most recent quarterly report, here are some highlights which you should know. Delivery vehicles are rising and the company is still reporting losses. So similar to NIO and BYD, Xpeng is also not profitable at this stage. So Xpeng also holds a lot of promise, but would it become the market leader in China? I have my reservations. However, as I mentioned earlier, the EV market is a big space and there is always room for more than one player. Next on our list is Lordstown Motor. Founded in 2019 by CEO Steve Burns, it is an American automobile manufacturer of electric vehicle which specializes in pickup trucks. The ticker symbol RIDE has a market cap of about $4.3 billion. Their pickup truck Endurance is expected to cost about $52,000. If anything, this stock has been on a bumpy ride since going public via SPAC last year. The stock touched the highs of the 30s and ultimately came back down to a more modest level and has been trading flat between $20 and $30. The stock saw a massive surge in the prices because of the most recent news of President Biden pledging to electrify all the federal vehicles. The current production target for 2021 is about 2,000 vehicles. However, they plan to ramp up to 107,000 by 2024. The Workhorse sister company of Lordstown Motors is one of the finalists in the USPS contract, which if they get it, and this is just a speculation on my end, that a Lordstown Motor would be placed in a very good position to gain some of the contracts to electrify the federal vehicle. So from a short to medium term, I see Lordstown Motor as still being a press release company, which simply means that the stock goes up or down based on the news which comes out from the company. I'm not betting against Lordstown Motor, but I do see that there will be a lot of challenges for this company, in particular when GM and Ford unveils their electric vehicle pickup trucks. Next on our list is a company called Fisker, which was founded by Henrik Fisker and his wife Geeta Gupta Fisker in 2016. The ticker symbol is FSR. Their vision is to build the world's most sustainable vehicle, expected to launch their first mid-size SUV by Q4 2022. Price is expected to be around $37,000 for the base model, and the high model could go as high up to $70,000. Most recently, Fisker announced it will partner with Magna for the joint development of FI Pilot, which will be the first applied ride on the Fisker Ocean SUV. Here are some of the quick features which Fisker Ocean is talking about. The Fisker went public in October 2020 and the stock has been stagnant for the last few months. There's not much to analyze about the stock at this point because they haven't published any financial reports yet. This company also falls into our press release category. Next on our list is another exciting company called Electra Mechanical Vehicles, ticker symbol SOLO. This is a Canadian designer and a manufacturer of electric vehicles. Founded in 2015 by Paul Rivera, the company's flagship vehicle is the innovative purpose-built single-seat electric vehicle called SOLO. The vehicle will revolutionize commuting, delivery, and shared mobility. This is how they describe the vehicle. Again, not much happening with the stock price. This company is operating in a niche at this moment. And what I see as the potential going forward with this company would be in bigger cities and especially with food delivery options. The next on our list is Apple Car. And I will be honest, I was so tempted to put this on number 2 right after Tesla. But at this point of time, we don't have much information about it. And Apple Car will be the most exciting entrant in the EV space. Even Elon Musk acknowledges that Apple would be a direct competitor.
Apple?
Yeah, that'll be more direct.
That'll be more direct?
Yeah.
You can tell that by the hiring pattern and
Yeah,
that kind of
absolutely.
stuff?
I'm not looking down on any competitor, but Apple is in its own league. Similar to Tesla, Apple is a master of vertical integration with deep pockets of cash to pump into an electric vehicle. So there are some honorable mentions. Number 1 is Lucid Motors. They are not public yet, but there is a rumor that they may go public via a SPAC called CCIV. The next one on our list is Rivian, longtime competitor of Tesla, and they have been in news lately with supplying their vans for Amazon. So concluding this video, EV is the new frontier and we will see a lot more new entrants coming into the market in the next coming few months and years. There would be a consolidation at some point in time where the larger companies may acquire the smaller companies. As a long-term investor, you should look at options where you are investing in good, healthy companies as well as market leaders and companies which have a lot of room to grow. So keep that in mind. Well, that's it for today's video, everyone. I really hope you enjoyed today's content. Don't forget to hit that like button. If you want to see more videos on personal finance, investing, stocks to achieve financial independence, be sure to subscribe and share with your friends and family who can also benefit from this video. I'll see you again next time, my investor family, but don't forget to invest for tomorrow.